Hi, this is Lara at Elliott Wave Gold with your daily analysis for gold, done after the New York market has closed for Thursday 29th of August. I'm recording this video almost midnight New York time on Thursday the 29th. This analysis is going to focus on monthly charts, and I'm going to look at gold in comparison with silver, because I'm aware that my monthly charts differ for these two markets. So here's a monthly chart for gold, going back as far as I can with the data that I have from FXCM, going back to the 60s. And I have looked at data going back to 1780 something, and this all agrees. This is the last final fifth wave up, and I'm looking at this on a semi-log scale. So with that larger data that Kitco has, which I'm not using in this analysis, but I've looked at that, with that larger data and this piece of data, I'm looking at the end of a long rise up to the all-time high here. For gold, I'm seeing this is the end of a supercycle degree third wave. Here we have a supercycle degree fourth wave, and the final fifth wave from my main monthly wave count for gold is incomplete and requires one final upwards push. I've noted the turning points on this chart, and we'll go to a similar chart for silver next, and it seems that silver seems to turn before gold. Here it turned 2 months before gold. Here it turned 6 years and 5 months before gold. Silver turned in 1993, gold turned in 1999, it found its low. For the all-time high, silver turned 5 months before gold. It turned in April, and gold turned in September. My main monthly wave count for gold expects that we're going to yet see another all-time high, and then we're going to have a big crash for gold. But for silver, it sees the big downwards movement has already begun. Silver has already turned, according to my main monthly wave count for both of those markets. So I actually have no problem with that, and it would fit historically. Let's have a look at a similar chart for silver. This one again, going back to the 1960s, and I have to assume that this price point here is correct from FXCM, that we have a high way up here in November 1979 for silver. A deep fourth wave correction for silver down here, and the final fifth wave up. And the same turning price points are noted on both charts. For silver, from this low to this high, the structure subdivides beautifully as 1, 2, 3, 4, 5 with some great ratios. So I'm pretty confident in my analysis of this final fifth wave for silver at supercycle degree as being a completed 5-wave impulse, and this here the start of a bigger correction at grand supercycle degree possibly. We could also try and move the degree of labelling all down one, but then that would look rather strange at the daily chart level. For silver, it's in a deep correction, and this correction, the grand supercycle wave 2 within it, if it's a flat or a combination, could have a new all-time high, or at least some really high upwards movement. So there's no problem there as well with expecting some upwards movement for silver. Once we have the next little low, could turn up and move quite a lot higher for a big high B wave, which could be 90% length of the A wave, or it could even make a new high beyond the start of the A wave, and at that stage gold would still be moving up, so it certainly is possible. I have no problem with how those wave counts diverge. Before we go to the two monthly charts for my main and my alternate wave count for gold at cycle degree, on the monthly charts, this table looks at the different Fibonacci ratios for each of them. For the main wave count, the Fibonacci ratios are listed, and here they are listed for the alternate. And the thing that differentiates the two is this one here, and this is why the alternate partly is it's an alternate, because right within the middle of the third wave for gold, for my alternate wave count, there are no adequate Fibonacci ratios, and that's really unusual for that market. So, at the previous monthly chart for gold, this was the start of the final upwards fifth wave, and here we have 1, 2, 3, 4, and we need the final upwards fifth wave to complete the whole structure at supercycle and maybe at grand supercycle degree. My main wave count for gold sees an ABC zigzag correction complete down here for a big fourth wave correction, and this is counterpart to a second wave correction here. In previous analysis, I had cycle waves 1 and 2 here and here, and that looked really disproportionate. moving them up here still retains good ratios, and it has a better look with cycle wave 4. Cycle wave 4, if it's not over here, if it continues further sideways, is a triangle, a double zigzag, possibly but unlikely, or a double combination, entirely possible. It can't move into cycle wave 1 price territory. The price point that differentiates this main monthly wave count with the alternate I'll look at next is 1032.70. If we see price movement below that point, then we know that it's not just a fourth wave correction, it's a much bigger correction, and it could crash a lot lower. And I wouldn't want to put cycle waves 1 and 2 down here, and I certainly wouldn't want to put them down here. I think this is the best place for it. Alternatively, it's all the same to this point here, and then for this market I have tried to see if from this low to this high we can see a completed 5-wave impulse at the monthly chart level. There are a couple of problems with this wave count. It's not the only possible interpretation, but at this stage it's the best interpretation that I can see. The biggest problem is the brevity of this first wave, which must be its cycle degree. It's only lasting a couple of months. Certainly possible, doesn't break any Elliott wave rules, but it's well outside of the guidelines of how long you'd expect a cycle wave to last. It should last about 1 to several years, so a couple of months is particularly short, but then sometimes first waves are like that. So we could have 1, 2, a nice long third wave, a fourth wave reasonably in proportion to the second wave, giving this wave count overall a decent look, and a final fifth wave up. The biggest problem for the Fibonacci ratios, as I said on that table, is the lack of ratios in here. Right within the middle of the third wave, there are no adequate Fibonacci ratios between intermediate waves 1, 3 and 5, and that really is problematic. Gold has great Fibonacci ratios. To not see any right in the middle of a third wave really does reduce the probability of this wave count. So either I've got this completely wrong, or if this is possible, it's highly unusual. For this wave count, if we have had the same trend change as silver and we're in a new big downwards trend to last several years, we've either had the end of wave A at cycle degree down here, or it could move a bit lower as a 5-wave impulse. If the big correction is a zigzag, then A has to subdivide as a 5. A could be over, and it may have subdivided as a 3, which means that B is likely to reach 90% the length of A because the structure is likely to be a flat correction. That's achieved at 1847 or above. That idea does not diverge from the main monthly wave count for gold. It's also expecting upwards movement. For this idea, if we see cycle wave A is incomplete and instead of ABC we label this as 1, 2, 3, 4, 5, then it doesn't diverge from silver. Then we're looking at a little bit more upwards movement to complete a big fourth wave correction at primary degree, and then more downwards movement for the final fifth wave to end a 5-wave impulse for cycle wave A, and that would expect exactly the same movement next as silver. The point of differentiation between that and the way I've labelled it here is the end of primary wave A down here. If we see price movement above this point, the downwards movement is confirmed as a completed 3-wave structure, and then we'd expect the upwards movement to reach at least to 1847 or above, maybe even to make a new all-time high. If, however, price turns around and starts to move strongly lower without breaching this price point, then cycle wave A may not be over, it may continue lower as a 5-wave impulse, and we're looking at a huge zigzag unfolding. At the hourly chart level, this wave count follows directly on from yesterday. It's just possible now that we may have seen the end to this fourth wave correction. I was expecting a bit more lower movement to about 1401, and so far price has gotten pretty close to that target. Either sub-minuet wave Y is over here as a zigzag with a very slightly truncated C wave, or sub-minuet wave Y may yet move further sideways as a sideways moving triangle, and then the final fifth wave up should begin. When we have a really clear trend channel breach, at least a couple of hourly candlesticks above this small channel, and not touching the upper trend line, we can have a bit more confidence that we've probably seen the end of the fourth wave correction and the final fifth wave up should then be underway. The target for minute wave 3 to end remains the same. If we see more sideways movement, and I wouldn't expect it to move too much lower, minuet wave 4 may not move into minuet wave 1 price territory. Movement below 1384.60 at this stage would invalidate this wave count at minute degree at the hourly chart level. So it seems that silver turns before gold, and my monthly wave count for silver expects it's already started down, but for gold I'm expecting for my main monthly wave count we've got a little bit more upwards movement, probably to a new all-time high. We have a target now before we see a big trend change and the start of a big downwards wave. Historically, there's plenty of precedent for that divergence, for silver to turn first. That's all for me today with your gold analysis, and I hope that everybody is looking forward to a fabulous weekend.